Ever wondered how the ultra-wealthy seem to prosper even when the economy suffers from inflation? This mind-boggling question has been on the minds of many. Today, we're going to address it head-on. In this video, we'll start off by inflation, a term that signifies a general increase in prices and fall in the purchasing value of money. We'll then explore its considerable effects on the economy, highlighting how this phenomenon can make everyday goods more expensive and potentially erode your hard-earned savings. Next on our agenda, we'll explore how a select group views inflation from an entirely different perspective. Yes, you guessed it. We're talking about the wealthy. In contrast to the rest of us, they seem to grow their wealth regardless of inflation, recession, or any economic downturns. How do they manage this? Is there some secret knowledge they have that we don't possess? The answer might surprise you. In the final section of the video, we will unveil the strategies, the tried and true methods that the rich use not only to survive inflation but to profit from it. So buckle up and stay tuned as we delve into the strategies that the rich use to turn inflation into a money-making opportunity. Before we dive into the strategies, let's look at some real-life examples of people who have profited from inflation. Our first example is the Oracle of Omaha himself, Warren Buffett. Many of you might know him as one of the wealthiest individuals on the planet. But do you know how he used inflation to his advantage? In the mid-70s, when inflation was skyrocketing, Buffett didn't panic. Instead, he saw an opportunity. He noticed that companies with strong brand recognition and customer loyalty, like See's Candies, could increase their prices to keep up with inflation. This insight led him to purchase See's Candies in 1972. As inflation rose, so did the prices of See's Candies, and so did Buffett's profits. Our next example features Ray Dalio, the founder of Bridgewater Associates, one of the world's largest hedge funds. Dalio is a big proponent of what's known as the all-weather investment strategy, which is designed to perform well in any economic environment, including periods of high inflation. In the late 70s and early 80s, when inflation was at its peak, Dalio's all-weather portfolio, heavily invested in inflation-protected securities and gold, thrived. Lastly, let's look at John Paulson, a hedge fund manager known for his bet against the housing market just before the 2008 financial crisis. Paulson, however, also made a fortune during periods of inflation. He did this by investing in assets that tend to increase in value with inflation, such as gold and real estate. During the inflationary period following the financial crisis, Paulson's bets paid off handsomely. These stories aren't just tales of success. They're proof that profiting from inflation isn't just possible. It's been done time and time again by those who understand the game. Now that we've seen these examples, let's break down the strategies they used. First on the list, investing in inflation-protected securities. Now, you might be wondering, what are these? Well, these are types of treasury securities in which the principal amount adjusts with the inflation rate. The beauty of these securities is that they provide a hedge against inflation. So, when inflation rises, so does the value of these securities. It's like having an automatic defense system against financial erosion. Now, let's talk about the rich folks. You see, they have a knack for preserving their wealth. And how do they do this during inflationary periods? By investing in these inflation-protected securities, they effectively safeguard their wealth from being diminished by the rising costs of goods and services. It's a smart move, wouldn't you say? In essence, investing in inflation-protected securities is like buying an umbrella before it rains. It's all about preparedness. This strategy helps the rich ensure their wealth isn't eroded by inflation. Secondly, the rich invest in real estate and other tangible assets. Now, what exactly do we mean by tangible assets? Well, these are physical assets that have intrinsic value due to their substance and physical properties. Prime examples of these are real estate, gold, and other commodities. Let's delve into real estate first. With inflation, the prices of goods and services increase, and so does the value of property. This is because the cost of construction materials, labor, and land all rise, driving up property prices. Therefore, those who already own real estate can benefit from the inflation-induced increase in property values. This isn't about flipping houses for a quick profit. It's about holding on to properties and watching their value climb over time. Next, we have gold, often considered a safe haven during economic turmoil. When inflation hits, the value of currency goes down, but the price of gold typically goes up. Why? Because gold retains its value, and when people lose faith in their currency, they turn to gold. The rich, therefore, often hold a portion of their wealth in gold to hedge against inflation. Now, let's talk about commodities. These are raw materials or primary agricultural products that can be bought and sold, such as coffee, oil, or grains. Commodities, like gold, tend to rise in price during inflation. They are essential goods, and their demand remains relatively constant, even as prices rise. The rich often invest in these assets to protect their wealth from the eroding effects of inflation. So, how does it all tie together? Well, by investing in real estate, gold, and commodities. The rich are essentially betting on inflation. They're buying assets that they believe will increase in value as inflation rises. And more often than not, they're right. By investing in tangible assets, the rich can see their wealth grow even during inflation. But is this strategy only for the well-off? Or could anyone potentially reap such benefits? Stick around as we explore more strategies in the next scene. The last 3 ways the rich prosper during inflation are shares, foreign investment, and debt. Firstly, they purchase shares in companies that have the power to raise their prices when inflation causes a surge in the cost of goods and services. This, in turn, can raise their revenues and potentially their profits. For instance, think of a well-established tech company that creates a product in high demand. In all likelihood, even if the cost of this product goes up during inflation, customers will continue to buy it, thereby driving the company's profits and share price upward. Secondly, they invest in foreign currencies that are performing well. This is an advanced strategy. Inflation erodes the value of currency. If your country is suffering from high inflation, your domestic currency is probably losing value compared to other stable currencies. By investing in these foreign currencies, the rich create a buffer against this loss. Imagine living in a country with high inflation and deciding to invest in a stable foreign currency. As your domestic currency loses value due to inflation, your foreign currency investment could increase in value, providing a nice hedge against inflation. Lastly, they take on debt during inflation. Although this may seem counterintuitive, inflation reduces the real value of money over time. So if you borrow money now and pay it back later, you're essentially repaying with dollars that are worth less. This is why the rich may choose to go into debt during times of inflation. For instance, let's say you secure a loan with a fixed interest rate to buy property. If inflation occurs during the term of your loan, the real value of your debt decreases. You're repaying the same nominal amount, but in actuality, it's worth less than when you borrowed it. So these strategies, buying shares, foreign investment, and carrying debt, are ways the wealthy make their money work harder during inflation. They understand that inflation is not necessarily a financial disaster, but an opportunity to grow wealth if handled strategically. By employing these strategies, the rich can not only survive inflation, but flourish in it. So, as we've seen, while inflation may seem like a financial hurdle, it can also be a financial opportunity. It's all about turning challenges into stepping stones. Rich people leverage inflation to their advantage using various strategies we've discussed. Firstly, they invest in inflation-protected securities, which adjust their returns according to inflation rates. This ensures their wealth isn't eroded by the rising costs. Secondly, they channel their funds into real estate and other tangible assets, which often appreciate in value during inflationary periods. Lastly, they diversify their portfolios with stocks, foreign currencies, and debt. These assets can provide substantial returns when carefully managed, even amidst inflation. Remember, financial literacy and strategic investing are key to navigating through the volatile sea of the economy. With the right knowledge, you can turn the tide, making inflation work for you instead of against you. The rich don't just survive inflation, they make money from it. And with the right knowledge and strategies, so can you.